Hi and welcome back to Cheeky Crypto. Today we have seen a pretty significant surge in cryptocurrencies. We're going to be taking a look at Bitcoin specifically here and give you my kind of thoughts on what I think is occurring and what might actually happen next. Now, as I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe. Stay up to date with all the video content that we do here, and don't forget to join us in Discord. It is the first place we go to notify you of what is happening here in the crypto space. Check it out, linked in the description down below. But let's waste no more time. Let's get on into this. So here we have Bitcoin paired up with USDT on the hourly chart. So we've seen a pretty significant surge to the upside, and this is on the back of the CPI data. So if we come over to this here, for example, we can see that European stocks have rallied. The British pound hits a 6-month high after the US inflation print. Essentially, it's 7.1%. So what we are looking at here is basically a slight decrease, I guess, and positive outcome when it comes to the CPI data for the US. This has spurred on a bit of a rally in the markets. Now, I do want to kind of just urge a few people here to kind of step with caution. The pump has already happened, so we don't want to FOMO in, and I do feel that this is building up into something bigger. So let's go ahead and talk about what else is happening here, okay? So specifically, we've seen that today the UK employment change for September. We've seen some stuff over in China, the Euro area this morning for sentiment, and the US, which is obviously what's moved the market right now, is the CPI data, the inflation rate for November, right? And that's what's been going on. So we've seen some green in the market because it's not as bad as it could have been, right? Now, tomorrow, we have the UK inflation rate. We have an FOMC economic projections from the USA tomorrow. We have the Fed interest rates decision tomorrow, and we have a Fed press conference tomorrow. So tomorrow could be, again, positive for the market. We might see continued push to the upside, or if what is spoken about in the decision on the interest rate in from the Fed tomorrow could be deemed negative, we could wipe out a lot more than what has moved in today. So just be cautious. A lot happening tomorrow, and that will have an impact on various things that are happening today. So I'm going to walk you through the chart in a second with where I think things are going tomorrow. On the 15th, again, we have more, Bank of England interest rates and stuff like that going on. And we went through this on Sunday's video. So, if you want to know more about what's going on this week, then go check out that weekly close position on Bitcoin and to kind of understand. So, knowing that we've seen some CPI data and from the US and the markets reacted positively, tomorrow we're going to be seeing the Fed interest rate decision and the Fed press conference, along obviously with the UK inflation rate. So things are going to be interesting, right? So obviously having an inflation rate today, which was obviously showing us that there's a decline with inflation in the US, and then obviously tomorrow having an interest rate decision is going to be interesting to say the least. Let's go over to the chart though, right? So with everything that's been going on here, we have to understand a few things, right? So straight off the bat, it looks really, really impulsive in the way that it has moved, and for the most part, it is, and I'm still expecting further upside potentially today, early tomorrow maybe in the UK sense, but I'm expecting it to get wiped out pretty quickly afterwards. I'd like to be wrong, okay, so we'll kind of leave it at that, but for now, we have hit some pretty key levels. Let's go ahead and turn all this on. Okay, so I put out some TA this morning for our Discord members, and we were looking at this 1-to-1 ratio, about $17,562. We smashed past it. We went all the way up to $18,000 to the penny. Now, this is the interesting stuff. We have to hit $18,000.73. Okay, in order to hit that 1.618. Now, it's so close. We hit $18,000 to the cent, right? So we can argue that we're close enough. We're within 73 cents for Bitcoin is pretty goddamn close to a 1.618. But technically speaking, it is not surpassed the 1.618. And that is technically an issue. I don't mind personally myself, but if you're a purist on these things, that is a problem for your mindset. So at the moment, the way that this stands is that we do have over this side here, this little A wave, 1, 2, 3, 4, and 5. Okay, so we do have 5 waves up here. I'm just going to move that little CC out of the way there. So we do have these 5 waves going up. Okay, and we do have this kind of 3-wave structured move coming down here, so that's looking good. But do we have another 5 waves going up, and are we looking at just a C wave here, and is it just a zigzag pattern? Now, I don't think necessarily it's a zigzag pattern. This could be a trend, and that's a positive sign. I still think it could get wiped out pretty quickly though, so just kind of be really cautious with it. I think we've got the potential right here, okay, for it. Now, for this, it does mean that we'd have to pull back and maybe push up a little bit more on this one. And if that is the case, then that's a positive note, because it would mean it would take us higher than that $18,000.73, confirming that actually what's going on here would be a wave 1, wave 2, wave 3 kind of situation, then down for 4 and up to 5. Okay, and that there would then actually put us into a really nice position. It doesn't really account for everything else that's going on, essentially, because over this side it is all corrective. We have 5 up here, we pull back down, but this isn't anything here. So it doesn't look like we have any kind of major kind of impulsive structures on a bigger time frame, but it does look like this news, this event, this inflation rate data, the CPI data has had a positive impact to the point where we can start to see maybe an impulsive trend setting to the upside. And that's a positive thing. So we do want to reflect on it, but we should also be very, very cautious. And we're going to be cautious for some of the more obvious reasons. Okay, so what we'll do is I'll remove the fib there so you can kind of see a clearer kind of picture here. Now, invalidation of this, okay, is actually set here. Okay, so if we want to be really thinking positively about these things, we can't really come down lower than $17,360 again to the penny. So I'm going to change that from yellow to red, and I will remove this low level here. So now we have an idea that if this is our wave 1 structure and it sits right up here at this $17,360, wave 4 here is never allowed to cross that. So if it crosses it, it's just a zigzag. And if it stays above this level, then we have some kind of hope that maybe things can move to the upside, right? So just kind of keep those things, open for now. We'll see how they kind of go. Now, the issues that we have, and the reason that I think it's highly likely that we do hit an invalidation tomorrow, is that our momentum indicators have basically shot up. They've all gone from kind of nice oversold areas to overbought areas, right? So, and this is an indication that there is low volume actually pushing this price up higher. Okay, so it's not really being backed massively. Now the price has moved up because there's huge shocks to the supply system for Bitcoin. A lot of people have been withdrawing their Bitcoin from exchanges. So supply is thin, right? There's low supply, and as some demand comes in, price can naturally move up pretty rapidly. But what we want to be really blissfully aware of is that we're actually able to go from oversold to overbought on all of these timeframes here very, very quickly. And that's a bad thing, because it does mean that we're probably going to break down slower, as in more people are likely to sell than buy. And as this price has bounced up a little bit, there's going to be people who were previously trapped now able to maybe liquidate their assets and move out of their positions. So just be really, really aware and cautious about that. And on that note, it is also probably aware, or probably something that we should talk about here, is who is actually selling into these pumps, right? This move to the upside. Who's the buyer and who is the seller? In the seller is very clearly here the bigger institutional and whale players, right? So these are your market makers, your Teslas, your micro strategies, and your just typical whale investors, right? These are positions. So black line are the number of wallets that have this amount of Bitcoin, right? So 1,000 Bitcoin or more. And you can see that they've been decreasing rapidly, okay? And they've been doing this pretty much since March. If we actually bring up a whole year's worth of data for this one, here you go. You can kind of see all the way from 2021, November-wise, they shot up at March, end of February, beginning of March, and then they just dump, right? And they're not actively buying. So big money is not getting involved in Bitcoin, but but they are taking these opportunities as price moves upwards to exit their positions. Okay, so there's always a buyer and there's always a seller. So that means who's buying? Well, here we can see exactly who is buying. It is the retail investor. These are your shrimps, so 1 Bitcoiners, and you can see the black line has been increasing rapidly since FTX, and it is a nice little surge out here at the end as well. Now, one of the things that we have to be very aware of when it comes to how these things work typically is that there's always a buyer and there's always a seller, right? And if a whale is selling their Bitcoin, they're selling it typically to a retail investor. The retail investor is then basically going to hold it for a period of time until they can no longer hold it. It goes down in value too much. They have to sell it because psychologically they want to, or maybe they need the money because, you know, everything else inflation-wise, recession-wise is kind of crippling people. So what you tend to find is then that the whales are buying back the Bitcoin, but at a discounted rate from the retail investors who bought it from the whale in the first place. Now, if I come up to, let me find it, where is it? It is this one here. This, no, it's not. It is, if I can find it. Where are you? Yes, this one. And this is 2018 bear market, right? We can see that these 1 Bitcoiners were basically accumulating during the bear market, and then they sell it during this flat period of right here. So the orange line is the price action of BTC. You can see it just trades sideways during this flat period, and you can see that they're selling their positions. Now, why is the price going sideways whilst they're selling their Bitcoin? You'd think, okay, well, more Bitcoins entering the system, the price would go down. That's not the case, because during this flat period of time here, you have these 1,000 Bitcoin wallets increasing. So the whales are buying it from the retail investors who are selling it. Now, why is that important? Well, here you can see the bull run that led up into this, right? You can see all these retail investors buying up right into the peak here. Now, when you take a look at the whales were selling into the pump. They were decreasing their positions as that price was pumping up. They sold the pump and then they buy the dump. Okay, so understanding that it's the opposite way around for these big, large institutional players, understanding that they want and what they're looking for is liquidity. When money comes in from retail investors, they can sell their Bitcoin to them. And when money comes from the retail investor looking to buy, they can sell their Bitcoin to them. So why do I mention all this? Well, I'm mentioning all this now because what we're doing and what we're seeing is we are seeing an increase with retail investors here, okay, as that price pumps up, and then we're seeing a decrease with our whale investors. Okay, so big money is exiting while small money is coming in. Now that's important because as we start thinking about these kind of structures here, who's actually backing it? It's not big money, but big money is selling into this pump. So we want to be really, really careful because it's great to see these forms of these trends. This trend is not set yet. It is far too early. It can still, of course, be just a zigzag pattern, a 5-3-5 pattern, and may not actually turn into a structure like this. Now, if it does complete 5 waves and we do have this trend getting set, that's a good sign. But again, I'm going to just highlight the fact that this does not marry up nicely with where we actually started from this low point. Okay, so it doesn't really look like it has a really good kind of traction to it. Now, we could maybe look at this potentially as a wave 3 position by the time it finishes, and then we'll analyze that if that is the case. And the best case scenario here for Bitcoin is that we have this kind of structure here coming on in, and all of this is going to be some kind of wave 3, then some kind of wave 4, and then down. And once we have this structure and we can confirm that there's a trend, what we tend to do here is we wait. Let me just put that back. I don't want to move that one around. We wait for the dip afterwards, which will be a nice 3-wave corrective structure, usually and typically between 50 and 88% retracement of the entirety of this trend. This is important because this is exactly what I've been talking about for a long time, that if we do trend up, we buy the dip afterwards and we don't get the bottom, but we get very, very close to the bottom, okay? And in doing so, you can then be buying and the confirmation that you're in a trend, rather than kind of hoping that you're in a trend, FOMOing in all of this part here. You wait for this one, you know you've got a trend, this is just a dip to the trend, and then you can rally on up. So essentially everything's looking okay at this point, but I do want to stress that the whales are not buying. And as I usually say, if the whales aren't buying, I'm not buying. And this is not a confirmed trend yet. It has the potential to become a confirmed trend, but we aren't there yet. So kind of keeping an eye on it, but I'm not happy that the fact that it's being backed just by retail investors. We need to see big money coming in here if we want to see any decent move to the upside. Like I said previously, we had the lows kind of scoped out at 13,200 level. That has changed a little bit as we kind of get higher here, but we are talking anything higher than 18,200 to move this target up a little bit. Would not invalidate it until we move up higher than $21,500. So there's a lot of still potential to the downside here. So just be really, really cautious in the space. I'm going to leave this video right there. If you have found it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Do join us in Discord. It is a centralized hub of everything that we do. It's completely free, and I don't think you'll be disappointed by what you find down there. So guys, until the next one, have a fantastic day.